it is very common for silver futures markets to trade 200 times the amount of silver available for good delivery per day. Per day. So if you think about that over the course of the month, 200 times 30, you'll get the sense that often the outstanding value of futures contracts in the silver market on a monthly basis are 6,000 times the amount of silver available for good delivery. The theoretical technique around moving the silver price higher or lower than through manipulation, or at least one way, would be to establish a position, long or short, in the futures market. A laddered position from 3 months, even 30 days, out to 2 years. And then exert influence in the physical market, either long or short, during that period of the trading day when there was the least amount of volume, so that the least amount of money applied could generate the largest move. Let's look at hypothetical math. An intelligent group of traders, notice I didn't say a moral group of traders, but rather an intelligent group of traders, borrows, let's say, $50 million worth of physical silver, just for a round number, while simultaneously on the short side, because that's been the easiest thing to do for the last few years, shorting $1 billion worth of silver futures, applying the type of margin that's available in that business, which is to say 10-to-1 margin. So we now have $1 billion short ladder, which stands us $100 million or $150 million if we're cautious. We've borrowed, remember, $50 million worth of physical silver, and we sell that $50 million worth of silver on the spot market, day market, during a point in time when the market is very, very, very liquid. It is possible through this technique to knock the silver price down 4%, 5%, or 6%. And that 4 or 5% move is reflected in the futures market, where we have $1 billion position with $150 million worth of exposure. So in a sense, we have effected a really spectacular leveraged gain relative to the amount of money that we have lost by borrowing and selling that physical silver into the physical market, and then rebuying it and delivering it back to the borrower. You will note that it was precisely this technique which was used to manipulate the market, the silver market, in the 70s long. The manipulators don't care up or down. They will manipulate a market using the leverage inherent in the futures market, whichever way is easiest for them to manipulate it. Given the strength of the US dollar that we've seen for the last 40 years and the concomitant relative weakness in precious metals prices, for most of the last 40 years, the easiest way to manipulate the price of silver in the short term was down, not up. There will be periods of time, I suspect, in the next 10 or 15 years, when it will be much easier to manipulate the price of silver up. And I think that that will occur with the same degree of frequency that you're seeing now on the short side of the market. I am not one of those who believes in the long-term systemic manipulation of the silver price simply because nobody has had the need to do so. The strength of the US dollar has done a wonderful job reducing demand for silver and reducing demand for silver stocks. I don't believe either that the people who are alleged to preside over this manipulation, whoever they might be, the Rothschilds, the Bilderbergers, the Fed, JP Morgan Chase, whoever they are, President Biden, I don't think collectively that they have the intelligence or the patience or the need to engage in a long-term rig. I cut my teeth in the Vancouver Stock Exchange as a young man. And I saw an awful lot of manipulated markets and rigs. And I don't believe that I ever saw one that lasted more than 6 weeks, simply because the conspirators would turn on each other when there was too much profit built into the transaction. And I suspect at the upper levels of Wall Street that the circumstance is the same as it was on the lowest levels of Howe Street in Vancouver. And so for that reason, while I acknowledge and expect the silver market to be manipulated in the short term, I don't see any evidence or, frankly, any reason for silver to be manipulated on the long term. I do see a situation where what we've observed in the last 50 years or 40 years, the benefits to the economy of demographics, which is to say the baby boomers contributing rather than extracting from the economy. Global peace, which seems sadly to be in retreat. Global free trade, which seems sadly to be in retreat. But importantly, ever lower interest rates, which are very much in retreat. I see a circumstance now where the wind is shifting from silver facing a headwind to silver and gold having the wind in their sails. Be very clear, or I should be very clear with your listeners. I don't own gold as an example because I think it might move in US dollar terms from $1,925 to $2,100. This $2,000 level means nothing to me, nor do moves that last a week or 2 weeks. I own gold because I'm afraid that the set of circumstances that we face today will cause gold to go to $6,000 or $7,000. In fact, when younger members of your audience say to me, Rick, how can you cling to this relic gold? When is it going to move? Well, I began buying bullion or rebuying bullion for my own account in 1998, admittedly a little early. But in the period 2000 to 2023, the gold prices moved from 256 US dollars to almost $2,000. So when people say, when is it going to move? Over the last 23 years, that's when it's going to move. It has moved. But I suspect, I don't know, I suspect that the move in front of us will be much greater. And my experience has been over 49 years that the markets, when I say markets, I mean precious metals markets, are led by silver, by gold, pardon me. But when that momentum and when the narrative is established, as we said before, silver moves further and it moves faster. And the silver stocks move the farthest of all. From my own perspective, I'm likely to have a fairly de minimis part of what is a fairly large net worth involved in speculating in silver and silver stocks. I suspect something like 2.5% of my portfolio will be involved in the silver trade. One of two things could happen. I could bore myself to tears, which I'm okay with. Boredom, I think, is high praise. Or I could be wrong, and I could lose maybe 50% of 2.5% of my net worth. Or I could be right, and I could enjoy a triple in the metal, or, pardon me, a 10-bagger or so in the stocks. Make no mistake, if past is prologue and the gold price were to triple, the silver price, if history is our guide, would do better than triple. And the silver stocks would, in certain cases at least, the better ones, give you the type of performance that the better ones, the better speculative ones, have given me in the past. And those are very handsome returns indeed. It wouldn't surprise me to see a 2.5% allocation of my portfolio become 20% of my net worth. Juxtaposed to, if I'm wrong, seeing 2.5% of my portfolio become 1 or 1.5% of my portfolio. The juxtaposition of the upside to the downside is so spectacular that I can't help myself. Do I know when it's going to occur? Of course not. I don't even know if it's going to occur. What I do know is that the competition to put those positions on from other speculators is non-existent. And I love circumstances where an asset class that I would like to own is one where I enjoy no competition on the bid.